So I gave this exact talk last night. It took 50 minutes to go through this presentation last night for some folks in Georgia. And fortunately, the same method here, Zoom. But hopefully we can do it in about 20 or 25, and I'll give you some highlights and leave out some of the extras. But I'm thankful to have everybody here and glad that we have this avenue to deliver this information on a timely basis, and hope y'all get something out of it. And if there's things that you'd like us to change, please let us know as we go through these things. Again, send us questions before we have these meetings, and we'll try to answer them. But anyway, you, Aaron was talking about corn prices going down pretty strong. On the opposite side of that, cattle prices are going up. Aaron was talking about storage being a really good method of capturing value in Tennessee. Well, I'm going to tell you, being diversified is also a good way of capturing value and managing risk in Tennessee. Because I sit here with corn in the bin and cattle on the hoof, and so I'm losing value in one and gaining value in another. But the thing of it is, that is something to remember as we deal with our producers, as we work with our producers, that we all have these different situations, and so some things are positive and some things are negative. Again, the things that are driving this market is that drought influenced heifer retention and slaughter rates, where we had tremendous heifer slaughter, tremendous cow slaughter, and very little heifer retention in 2022, which reduced our cow inventory to our beef cow inventory to a 61-year low at 28.9 million head. And I'll show that later. But I know that if you have stocker producers in your county, they're looking at higher purchase prices right now, but the futures market is still offering positive margins on those lighter weight calves being purchased now and to be sold in late summer and early fall. The cow-calf producer is looking at higher prices, and that should result in positive margins in that aspect. And we do have this international market that remains strong for us. So just this is I want to just very briefly talk where we are on these slaughter cattle prices. We traded around 161 last week. I have not seen any trade for this week, but will it be higher? Will it be lower? Will it be steady? I don't expect lower. I expect steady to higher. We probably will find some steady trade through March, and then another bump in these prices in April. But I want you to remember that our record price on slaughter steers was a little over 171 back in 2015. And I have said several times in meetings the past several months that I think there's a chance that we get to 170 this spring. Now, the futures market is not expecting that. That is not what the futures market, but I'm a little more optimistic than most, and I may be pushing optimism a little too far. But it would not surprise me to see a week where we trade right at the 170 mark this spring. And frankly, the fall is probably going to be even stronger than the spring. That's not a typical seasonal pattern, but that is something that does occur or has occurred, and it has a good chance and possibility of occurring this year. This is the 5 to 6 weight steer prices in Tennessee, and y'all can see how the past 3 or 4 weeks prices have just escalated in a hurry. And so if you take that, I mean, we've gained about $30 since the beginning of the year, but in the past month, during February, we gained $20 a hundredweight. So anybody that is selling right now relative to the end of January, 1st of February on a 550 pound calf, we're over $100, essentially $110 more a head, which puts a lot of people into profitability mode, because you're talking about over $1,000 for these lightweight calves coming straight off the cow. I'm not saying it's making money hand over fist, but there is profitability at these levels for those who have managed their cost appropriately. The 7 to 8 weight steers, as I've always said, I don't really put this up here for the price level as much as the trend, because this is the weekly auction cattle, and we don't have a lot of cattle that we might have 30 or 40 head in this category. Well, I say that 30 to 40, it'd actually be about 60 to 80 head every week that go through this category through the weekly auction market as singles or small groups. Because we typically sell most of these cattle as truckload lots. And we will find out with the Hodge sale on, I guess it's Thursday, and the Lower Middle Tennessee sale on Friday. We'll see where load lots of these type of cattle are trading, and they're going to be in that 180 type area for 7 to 8 weight type steers. They're going to be in that 180, and we're going to get to where here we are trading around 182, where the CME 182, 183 is where the Chicago Mercantile Exchange feeder cattle index is. And if y'all remember, the feeder cattle index is that 12 state region out west, and it's actual cash price. And that's important because that's what the futures market is trying to predict, is that CME. And so we'll talk about where the futures market thinks that price is going to go, because it is very, very stout moving into the summer and fall months. Again, I just throw this out there as a general statement. Slaughter cow prices have been very strong. I think we will easily see slaughter cow prices break the dollar mark. And so encourage producers to go ahead and sell, especially those that don't calve this spring, move those cows. And some of these fellas, some of these producers may have some cows that have a calf on the ground right now, and they need to sell the cow this year because she's old, or she's just, she's got a bad udder, or she's got a bad iris, whatever's wrong with her. She might consider early weaning the calves on those cows that you're going to move. And I'm talking about maybe August time period. A lot of these calves are born January, February, March. And so a lot of these calves, by August, they are weanable. They're at a place where they can be weaned, and weaning them in this case is just pulling the cow out of the pasture and leaving the calves with the rest of the cow herd. And so give them a chance to capitalize on some high value on these cows before we get to the fall months and prices collapse. Just a thought there, but I think we're going to be above $1, and that's a really good salvage value. Here's 2023 slaughter so far. We still have heifer slaughter up compared to a year ago. Steer slaughter's down, which is staying on track with 2022, and beef cow slaughter's down. Thankfully, beef cow slaughter's down, but we're still moving heifers and we're still moving beef cows because of the hay situation. We're very, very fortunate to have had a very early spring, because I know y'all have all noticed the extreme green up in grass. Not that there's a lot of growth, but that green up has resulted in some cows doing a little bit of grazing, which has saved a little bit of the hay. And I can show a chart on where the hay situation is. But we had tremendous heifer slaughter, up nearly 13% in 2022 compared to 2023. And then steer slaughter was down nearly 4% or so in 2022 relative to 2021. I just misspoke. So heifer slaughter was up nearly 4% in 2022 compared to 2021. Beef cow slaughter was up 13 or so percent compared to 2021. And so that's where all these animals went. Are y'all still there?
Yep.
Okay. Something just changed on my screen, which threw me off. All right. Sorry, I apologize. So anyway, we're gonna see slowdown in heifer slaughter. We're gonna see a slowdown in beef cow slaughter in 2023. But we don't have a whole lot of animals to be slaughtering. And the second half of the year, I think, is where we'll start picking up this retaining of heifers and retaining of beef cows to try to expand the herd, especially if we have, if what comes to fruition is Aaron's lower corn prices that he talked about, and if we have good forage conditions through the summer and heading into fall, I do think we're going to see some of those things pick up. Now, what does that mean for cattle inventory starting next year? I've got more thoughts on that, but I'm going to give it some time. beef production's down so far year to date. Pork production's up and broiler production's up. Now, here we are. Where we are on beef production is, we change production by either slaughtering more or slaughtering fewer animals, and then the weight of the animal that we slaughtered at. So if we want to increase beef production, we kill more animals and we grow the cattle bigger. If we want to reduce beef production, we slaughter fewer animals and we don't grow them as large. Well, right now, heifer and steer weights are heifer weights are about 20 pounds lighter than they were a year ago, and steer weights are 10 or 12 pounds, something like that, lighter than a year ago. That's important because essentially, if let's just call it 10 pounds and we're killing 500,000 head of those animals a week, that's 5 million pounds a week. And 5 million pounds a week over a 50-week year is 250 million pounds, or I guess it would be 260 million pounds for a 52 week year. So you think about 260 million pounds. Now that's compared to the fact that we're probably going to produce 25 billion to 26 billion pounds of beef this year, but it'd probably be close to 25 billion. So, that 260 million doesn't seem like a really big number, but frankly, it's still a pretty big number. And so that we won't have to move that beef. And so that's going to support those beef prices. This is 2022 data. I'm going to tell you what I expect for 2023. Imports will pick up in 2023, primarily because we are producing less beef. And if we're able to retain more cows, that means we have less lean grinding beef to go into our system. So therefore, we will see imports increase. A lot of those imports will be coming from Australia, New Zealand, because Australia has finally rebuilt their beef cattle herd, and we'll start seeing more of those lean grinding products come into the market there. Early on, we'll see quite significant imports from Brazil until that quota tariff is reached, and then that will slow. We will continue to import 50/50 trimming type stuff out of Canada. With Aaron's people, I joke, Aaron, I don't mean that seriously. You're part of our people too. But you realize that as we reduce production, imports are going to increase. Same way, we had really, really strong exports in 2022, but I can very easily say that exports are expected to decline in 2023 because we're not going to have as much product to export. And realizing that we export a lot of high quality beef or items such as tongue, liver, tripe, heart, things that we don't typically consume here. Those are the, either really, really high quality things or things that we don't consume. That's what goes out of this country to places like Japan, South Korea, Mexico, China, Egypt, wherever it is. Egypt will be a strong market for things like heart. But expect these things to decline. So don't get too excited when you say, oh, why are we importing so much beef? And why are we not exporting as much beef? Well, it's just strictly because we're producing less. So realize again that Japan and South Korea hold the top two spots still, and China's coming right in there. Now, the one thing to mention about China is we had the recent situation in Brazil with BSE, and China has halted imports of Brazilian beef. And frankly, I don't think that means that we're going to ship more beef to China. I think they will pick up more beef out of Australia because our beef is a lot more expensive. So I think they're going to pick up more beef out of Australia. What that will do is that may open up some opportunities, a few more opportunities in Japan and South Korea for us to capture just a little bit more share in Japan and South Korea. We'll wait and see, but I think that's how it'll play out in the short term. Now, in the long term, I don't think China's going to keep Brazil off the market very long. Boxed beef prices were strong all of last year. When I started this job 11 years ago, choice box beef prices had never been above $2 a pound. And once we broke through that $2 a pound mark, it took about a year and a half or so, but then we hadn't been below that mark since. And so $2 became a strong support point for box beef. In other words, it was really hard for choice box beef prices to fall below $2. Well, probably last summer sometime, or maybe even last spring, I said something about the fact that it appears that maybe 250 is the new support point. And you can see in October and in November, there were a couple of times where we fell below that 250 support point, but not by much. And so I still maintain that it may be very difficult for retailers to push box beef prices below 250 at the wholesale level. And whether that's good, bad, or indifferent, if we had enough time, I would go through my thought process of the consumer, and I don't, and the short version of it is this: we have rising interest rates and we have rising inflation. Despite those two things, consumers continue to purchase beef. So the idea that if inflation increases, if beef prices continue to increase at the retail level, if interest rates continue to increase and pull disposable income into mortgages or car payments or whatever it is, the idea that consumers are going to stop buying beef does not resonate with me at this point. And I say that not from, I mean, from a logic standpoint, it does resonate, but from an observational standpoint, it does not. Because what I have observed is that consumers have continued to purchase beef items despite inflation and interest rates up to this point. So the question is at what point or how high do interest rates have to go and disposable income have to disappear, and how high the inflationary aspects have to hit this market to say, oh, we don't really have enough money to buy beef anymore, so we're going to buy something else. So I'm just not too frightened about that. I think there's a good chance we hit $3 again pretty soon, probably exceed $3 a little bit. But this spring will be the telltale of how that's going to play out as we hit grilling season in May, late May. We're still struggling from a feed situation standpoint. We, as much as we prayed for rain back last summer and fall, and we didn't get it, we've had plenty of moisture this winter. That should be very beneficial for putting a crop in starting late March, early April. To have good soil moisture, and we realize that we need those rains throughout the year. But also understand that there's still large portions of the country, and especially cattle country, that still need some additional moisture. They have been receiving some moisture. They've had some good rainfall, but at the same time, that they're not in the most ideal situation. Last year, this severe drought that covered a lot of the country really hit hay production, and so we're at the lowest hay stocks, December 1 hay stocks on record. Now, the record goes farther than 1997. It goes back farther than 1997, but that's what I have here. And these are really, 71 million tons is very, very low for hay stocks December 1. When we get the May 1 hay stocks report, again, we're going to see it very, very low. I was looking at some hay auction data yesterday, and it's clear that hay prices are strong across the country. Doesn't matter where you are; those hay prices are strong, and they will be until we have barns full of hay in 2023. And let's just hope and pray that that's actually what happens. Corn prices. Aaron's already covered this very, very well. They have declined sharply on the futures market. as he said, I think there is going to be some basis adjustments because of the futures market declining. I don't think you'll see as much cash price decline as you will uh, the futures market, because I think basis is going to adjust. But still, at the same time, from a feed perspective, that should lower feed cost a little bit. Hay prices are strong. That's just to give you an idea of the national tendency of these markets, and hay prices are extremely strong. So here's where we are with cattle inventory. Beef cows at 28.9 million head. That's the lowest cattle inventory in 61 years for beef cows. Beef heifer replacements in 2022 were down nearly 6%. We only had a little over 5 million held. The calf crop was at 35.4 million head, down 2%. And realize that, that calf crop is very important, because that's how many calves that we have available total that could potentially go into the feedlot system. I've done some preliminary calculations for what that calf crop looks like for 2023, and I think you can easily take off about 900,000 head off of that 34.5 million, or just call it a million. It will make it easy math, and just take a million off of that. So I expect that calf crop to be 33.5 million, 33.6 million head in 2023, which is essentially 2 weeks of slaughter. And you take 2 weeks of slaughter out in that fashion, and that really reduces our beef production, which should keep beef prices elevated and calf prices elevated. So cow-calf guys will be excited about that. Stocker guys won't, our margin operators won't necessarily be excited or deterred. It's just they're going to have a higher investment to try to achieve similar returns, which means there's more risk on the table. Most of those cows were lost through the southern plains up through the northern plains. So you just take all those plain states and go straight north from Texas to North Dakota, and that's where most of those cattle were lost. But then you come over here to Kentucky and Tennessee, and we lost a lot of cattle in these two states that that we sit in. Very, very important. These are the same states where we'll see the growth occur when we start to expand this herd again. I know that in our world, there's a lot of people that want to say that houses and this, that, and the other are taking up all the land that have cattle. Well, that doesn't tend to be the case. Normally, it takes up crop acres. They tend to go for those easier acres than the pasture land. But at the same time, I don't think it ate up nearly 50,000 beef cows either. Even if it was all taken, if all the houses were built on pasture, I don't think it took up the pasture acres of 50,000 cows. I think drought had something to do with part of that. Very expensive to feed cows right now, based off Kansas data. $1.40, pretty expensive. And when you're getting paid $1.61, $1.62, that doesn't just make for huge profits. Doesn't mean that you're not making some money, because feedlot is making some money, but it's not huge profits at this point. They will eventually get there, especially if these feed prices fall off a little bit. They are paying up for cattle, but I think there will be some profits there, and they're going to have leverage over that packer. They're going to be able to tell the packer what they want for some cattle to get them moved, because those packers need cattle to fill the chains. Yesterday, the March futures market closed at 189.80, and the CME index, that feeder cattle index I talked about, was trading around 183 or so. We'll just call it 183. So the March feeder cattle futures says that the market's going to increase $7 this month. So by the end of this month, it's saying that an 800-pound steer out west should increase by $7, which would also increase cattle prices here locally for an 800-pound steer by $7 by the end of the month. That's a pretty strong jump. You consider $56 a head between now and March 31st. That is very, very strong. That is very, very strong. And it's not just that. Look at August here. So if we're trading at 183 today, August is calling for a $30 increase in the cash price between now and the end of August. That's $240 a head. Can the market do that? Has the market done that? You bet it has. It has done it several times, made 20, 25, $30 price increases from uh, late winter to late summer. I mean, we may even see this market go higher. The question is it worth taking all the risk when you know there are good profits to be had? This is why there may be an opportunity to go ahead and use some type of price risk management. Maybe not put your biggest dollars into price risk management, but put a few dollars into it to secure a profitable price. And if the top side keeps going, you have it wide open and just let the prices run. But if they were to collapse like corn prices have done in the past week and a half or so, you could benefit if something like that happened in the feeder cattle market. We never know what, between Russia, Ukraine, China, it is hard to know what can make this market collapse, but it very well certainly could. So that's fed cattle price forecast. Not a whole lot of people got cattle on feed, but I think, again, I think there is a week that we could hit 170, but these are quarterly averages. And then here's the projections that we have for March, April, May through August there for those lightweight calves, and then load lots of 7 to 8 weight steers and heifers. Things look very positive. Things look very, very positive. And so with